U.S. stocks ended lower Friday at the end of a choppy day as investors worried about corporate earnings and looked for signs of easier monetary policy from Federal Reserve officials. Friday marked the last day before the Federal Open Market Committee members enter a quiet period next week, ramping up to the meeting on July 30th and 31st. So, don't you wish we could have a quiet period for politicians? St. Louis Fed President James Bullard said Friday he favored a 25 basis point cut at the close of the Fed's July meeting. He did downplay the need for any more aggressive easing. Nevertheless, markets have largely taken this week's Fed commentary to represent a chorus of dovishness as central bankers focused on the lingering uncertainties clouding the global outlook. Fed Chair Richard Clarida, in an interview with Fox Business Thursday, acknowledged that the U.S. economy is in a good place, but added, "You don't need to wait until things get so bad to have a dramatic series of rate cuts." As of Friday afternoon, the markets priced in a 22.5% probability of a 50 basis point cut. The probability of at least a 25 basis point cut has held steady at 100%. However, recent data has indicated that the U.S. manufacturing, retail sales, and the labor market have all strengthened. But on the other hand, the U.S.-China trade relationship, which is one of the key uncertainties, still remains unsolved. So, there's your good news and your bad news. So, let's take a look at our charts to see what they say. We're going to look at two charts today, beginning with the 2-year weekly on the spiders, and then we'll move to the 6-month daily, also on the spiders. Now, we can see here that the previous high was in late April. We exceeded that this month. At that point there, we've come off the highs, and the Friday close was 297.17. Now, you can see some of the erosion there in the MAC where the fast line seems to be losing a little bit of power. It's still above the slow line, and it's pretty much near the levels that it was back in April. But I think if we move down here into the histogram, you can see that the power of the histogram at that point here is well below the level back here. So things are softening somewhat. Now, keep that in mind because we do have August coming up, and in August, the traders tend to leave on vacation. And when they leave on vacation, they do some selling. So here in the price rate of change, we can see also that things have declined and looks like they may be moving down. It's not necessarily going to say that we're heading into a correction, but I think we're going to have a little bit of pullback coming here relatively soon. It's not 100%, but I think that's where the probabilities are. A little bit of downtrend there, certainly a downtrend here in the stochastics, if you can see it there. Moving into the volume is trending down a little bit, no red flags. And then into the Williams, again, a little bit of downtrend. But the Williams has a way of doing some sawtoothing as it did here in this period. So that's why I'm saying it's not guaranteed that we're heading down. We could have just a little bit of softness here. But again, we are going to be moving into August here pretty soon, and we still have that rate cut, potential rate cut. And if we do get a rate cut, that may help things. But if we don't get a rate cut, that may hurt things. So let's move back up here. One last look at the weekly chart on the spiders. A little bit of erosion. No real red flags, but just some possibility that the markets may be heading down. But let's go take a look at the 6-month daily chart. And now looking at the 6-month daily chart on the spiders, we could see here that in the last day or two, we've come down to that 20 EMA and we've kind of played with it a little bit. Back here, same sort of thing. In late June, we bounced off and went on up. And if you even go back to say January into February as well as into March, it followed along that 20 EMA and then kind of crested at that point here in April to May, and then we finally went below the 20 EMA and the 50 EMA. So that is a possibility here. We'll have to just wait and see. And the reason I say that's a possibility is because the MAC is fast line moving through the slow line here in the last couple of days. Now, it's done that several times before, especially here in the March period, and it wasn't too bad for the market during that period. But I think things are just weakening a little bit more than we were back then. We had more power in the market. Now, we do have that potential rate cut coming, and that could help, as we said. But certainly the histogram shows that things are weakening, heading on down. As well, there in the price rate of change, and certainly in the RSI, we're at 49.20, just under that midline or 50 line. So things are weakening a bit. So I wouldn't be surprised if we have some selling coming here soon. Again, this isn't necessarily going to be a huge sell-off, just a correction to let things reset. At least that's what it shows right now. That's the greatest probability. Again, Williams heading on down. It's heading toward that oversold territory. We'll be there probably sometime, say mid next week, probably at the latest, if it continues on down. And I think it will. I think that's where the probabilities lie, just looking at the price chart as well as the main oscillators such as the MACD. So a little bit of softness in the market coming up. So don't let that frighten you. We'll take a look at the monthly chart perhaps next week to see where the long term is going to head. So for today, that's ChewDog Charts. Thank you.